good afternoon, depending on where you are in this world. This is Hedging Lee with a morning update for Bitcoin. Yesterday we left it off at this. The price going sideways pretty much is quite befitting of the type for wave 4. And if this is wave 1, 2, so this one was 1, 2, 3, 4, 5 impulse, A, B, C for 2, and therefore 3, which was the most extended and therefore moving the most vigorously, and I often say most violently at any degree of trend. That extended wave is the one that moves most violently. If wave 1 is extended, that'll move most violently, 5 as well. But usually wave 3 is the extended wave. Therefore, we moved in 1, 2, 3, 4, and 5. In this case, for these subwaves, wave 5 was extended. Now, and in this case, so yes, 1, 2, 3, 4, 3 was finished, and 4 is taking place. I believe 4 is probably done. Let me get rid of the purple lines here. I'll bring it back later, just so that we can see the waves better. And therefore, I'm making wave 1 about equal to wave 5, approximately. I'm just eyeballing it. And I believe the subwaves of this wave 5 have already begun. So let's get rid of the lines on this too, so we can see it better and zoom in at the same time. Now, this kind of subwave counting has, at least for me, from my experience, been crucial in being able to have it jive or see how it jives or qualify, as I say, the higher degree of Elliott wave counts, the ones that are higher degree than these small white waves. So if we have, again, 1, 2, 3, 4, and 5, and this could be 1 of 5. So let me draw that out. And I'm going to make that purple. 1, 2, 3, 4, and 5. So I think, wave 3 should be the most extended, probably go to 6,300 or so. That's been my target before as well. Okay. Wave 1 might not be done. However, given this down 1, 2, 3, 4, 5, so it can go a little lower than that, but this is a good approximation. I'm just really looking for the directional move. 3 is about 1.618 of 1. 4 is about the same as, 5 is about the same as 1. When wave 3 is extended, wave 1 and 5 tend toward equality. Is that a solid rule? Does it always happen like that? No, not at all. But that is the tendency. Some people asked, why don't you have data files of the percent where wave 1 is extended, percent of where wave 3 is extended? Well, that's not the case. Sentiment is not so easily categorized. The reason is because if you comb, you can get it, and you can get a population average. Okay, that's great. But to overlay that into an individual type of a coin or a stock, you have a degree of variance to take into account, and that degree of variance is what I call the personality difference. So it's not, unfortunately, it's not a cookie cutter application. If it was, believe me, it'll be easy as heck. So here we have 1, 2, 3, 4, 5. I think these could be the 5 subwaves. Could it go deeper than that? Yes. But this is where I think, based on 1 to 1 between wave 1 and 5, 5 can go to 1.618 of 1. That might bring it to 6175 or so. But for now, let's keep it like this. And I think the final downdraft of the white wave 5 has started. Now, let's go to a little longer term. So in this chart, it's a little more zoomed out. Again, showing the same thing, 1, 2, 3, 4, and 5 to around 6,300. And if this goes to 6,300 is what I'm calling the bull wick. If it pierces the lower trend line, I think it'll be temporary. And that temporary could mean that it'll probably stay there maybe a day and a half, 3 days below, and then come back up. At this point, I think it'll be pretty oversold to a smaller degree of trends. So that bull wick event is something that I would keep an eye out for. And this whole thing, even here, could pattern out a wedge, downward pointing wedge. And I think that'll be a fitting ending to this, what could be a final corrective wave to end at the very terminal end of it as a downward wedge. Now, this still is my primary count. I know others have their own counts. That's great. And that's where you really want to go to. And in other words, you got to be able to analyze on your own and rely on your analysis only. I can assure you, if you start going on the guru buffet line, you'll end up with what I call GIGO, garbage in, garbage out. And that GIGO syndrome then very tightly latches onto fear or greed. And people who try to trade based on guru consensus fail miserably because their perspective is not based on their sole responsibility of their own analysis, but the analysis of others. And when they try to commingle multiple analysis of different gurus, that guru buffet line doesn't really give them a profitable trade, but more often than not, usually a losing trade. And what do? They blame who? They blame the gurus. They never blame themselves. I've always said also consistently that a good trader is a bad trader who forgives himself for his mistakes on his own analysis and calls, learns his lessons, and tries again. That is the only way, in my opinion, to become a good trader or an investor. You have to rely on your investment analysis. Now, you can use others as a coach to learn how to do it, absolutely. And I do have quite a few clients who come to me for one-on-one coaching. Now, it truncates the time cycle for them, truncates the learning curve and the time, obviously, for them to learn. And that's really good. And having a coach to take you through all the pitfalls, etc., whatever, based on his experience is also very valuable. Now, I've been also asked a question as to how to keep the panic at bay during corrections like this. Well, I'll share with you what I do. I've already told you one thing. I don't go on a guru buffet line. That, to me, is the worst thing to do. If you're seeing a very dramatic correction and you want to know what to do, try and analyze it on your own. If you have zero analysis capability, yes, then find a couple of coaches. Learn it. Learn the methods to a certain degree of proficiency and try to learn it on your own. Even if you have zero TA background, the last thing I would do is go on a guru buffet line, because that'll have you latch on to what the consensus might be, and if that consensus of those gurus is fear, you're going to be very fearful, and vice versa. I've also said that awareness keeps the panic away. This is our primary count. But we are also aware that there could be a temporary piercing of the lower trend line, which is what I'm calling the bull wick. There is an alternate count, which I'm not going to share yet, because it'll just cause too much confusion as to what will happen if this will decisively break. if the lower trend line will decisively break. There is an alternate scenario, but I'm not going to get into that right now. I will once and if that decisive break occurs. It hasn't. The other thing that I found for myself to be very, very effective in keeping the panic and the fear emotions away, because I'm human. Oh boy, when there's a big sizable correction, I do feel it. But discipline really comes into play. And one factor of maintaining minimum of 10-15% of your portfolio in cash has saved my bacon many, many times over. During a very sizable decline, for example, in these areas, if you have cash at hand, you can come and wade through the blood through the streets and go shopping. And when I don't mean that on that day you spend all that 15%. No, you be very, very frugal and very, very judicious in how you deploy your cash outlay. But that feeling of buying when everyone's panicking is very empowering, at least for me, from a mental and emotional state perspective. The other way that I deal with greed and panic and fear polls is to ladder myself in. There is a technique that I show where you ladder yourself in using a technique of local support resistance zones. And that is something that I will probably cover sometime in July, maybe, in an educational series. But laddering effect allows one to, hold on one second. My cat's playing with my golf balls, okay? The laddering technique allows you to distribute your entry based on Fibonacci levels. It also allows you to exit based on Fibonacci levels. So those are really the several ways that I try to keep and sustain keep the panic away, basically. And I will get more into details on those methods as a trader or an investor. Okay, so back to here. Volume continues to decline. We should get a resolution soon. That's what I'm expecting. In my early wave count of A, B, C, D, E, with the E on the bottom trend line shows that the propensity of the price is to rise to the upside with a surge in volume as well. And the MACD could also pierce the bottom just like the price can, but also it could just bounce off this as well, bounce off the bottom trend line. And I think it's very nice to see pretty much the same pattern occurring in price and indicator, and basically in volume as well, just so you don't have the bottom side fluctuations. If you go a little bit longer with perspective, I think this still holds for me. From a pattern perspective, we have a downward wedge and a symmetrical triangle in combination, all of which on an MACD perspective is patterning out a symmetrical triangle as well. Even if we go lower low, I don't think this is a crash scenario. I think we are at the terminal end of this correction and not at the beginning or the middle. So let's see how it plays out. Okay. I wish you all a very nice day. Consider the things that I've said on how I use the techniques to keep the panic away. And maybe if you have questions on that or want more details, let me know in the discussion section. Thank you.